Welcome to the LA Real Estate Podcast. I'm buying and selling real estate in Los Angeles. Today, we're going to be talking about the process of writing an offer. Also, we'll be chatting about loans with mortgage broker superstar Natalie Salins from Movement Mortgage. And finally, we're going to give you our top 10 things to do to increase your credit score and help you qualify for a loan. Sarah, how you doing?
Hey, Tanner. I'm so happy to see your smiling face.
I'm happy to see your face. How you doing? How's
I'm doing
things?
Great. Podcast number 2.
Podcast number 2? Oh, my gosh. We're about to double the number of podcasts we've done.
We've increased our production by 100%.
It's crazy. It's crazy. I can't believe no one was doing an LA real estate podcast.
You know, it's so crazy. Before we decided to do this, I actually went searching to try and find a really good LA-focused podcast. And I could not find one. Not a good one that was informative and entertaining and easy to listen to.
It's nuts.
So I decided, let's create one.
That's right. We're going to make it. So this is for you, Los Angelino, and then also random person out there just wanting to get some information about buying a house. Hopefully this is helpful for you as well.
Also, if you're just lonely and you have nothing else to do and you just want some company, we're here for you.
If you've got a lot of cats and you need to hear the sounds of other human voices.
Absolutely. Hey, there is nothing wrong with cats.
Okay. Agree to disagree. The pre-approval letter. Let's talk about that.
Okay, so when you go to buy your house, there is one thing you can't buy your house without unless you have all cash, unless you have tons and tons of cash, and then, I mean, good for you.
Mm-hmm. Yeah. Right.
You need a pre-approval letter. And people say, hey, what's a pre-approval letter? What is that? Basically, a pre-approval letter is a letter written from a mortgage broker or a bank saying that, yes, they will give you a loan. Mm-hmm. Now, it's basically a commitment to give you a loan. There's other steps that come after that, but it shows you what you're qualified for and how much your mortgage payment is going to be.
I remember when I was going to, before I even started talking to you about buying a house, I was like, oh, okay, well, I'm going to go just, go to some open houses. And I went to different things and people would always ask, oh, well, what have you been pre-approved for or where are you looking? And until you get that pre-approval letter, you really don't know how much house you can afford.
Well, that's why it's important to get one. So there's actually a lot of reasons that you should get a pre-approval letter before you start looking. Number one, our LA market moves really quickly. So if you find your dream home and offers are due Monday and you find the house on a Sunday, and by the way, this happens all the time, and you say, okay, amazing, I found my dream house, I want to buy it, let's get the paperwork started, and you miss the deadline for offers, it's too late. And this has happened to so many people I know. Okay, yeah, I'll get the pre-approval letter, I'll get pre-approved when I actually find my dream house, and then you find your dream house and you don't have enough time to get pre-approved. It's a pretty easy process, but it's a bit of a pain in the butt. So you have to get your paperwork together, you're going to need your W-2s, your taxes, and a bunch of other documents to get together to present to a mortgage broker. And they're going to go through your documents and they'll tell you how much of a loan you qualify for, what your monthly payment is going to be, and approximately the interest rate that they can get you. Now, interest rates are always moving.
Right.
So they won't give you an exact amount or lock you in for an amount until you're farther along in the process, but they can give you an idea.
Well, I also know that's something we're going to talk to Natalie about a little bit later. She's in the top 1% of mortgage lenders in the country for the last 5 years. So she's kind of a baller in this territory.
She knows what she's talking about. I've actually worked with Natalie multiple times before. I've worked with a lot of different mortgage brokers. Natalie's great, and she has a ton of information. So we're going to be talking to her in a little bit. But really, super, 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 super important before you start looking, get pre-approved. Now, you can go on the computer and you can type in, these quick website, get a mortgage type places, and they'll give you a pre-qualification. That is not the same thing as a pre-approval. So those really aren't they're kind of worthless. I wouldn't waste my time. Instead, I would go to a mortgage broker, someone that can really look through your documents, and they'll also run your credit, and they'll tell you if there's any big things that pop out on your credit report. And often a mortgage broker can help you repair your credit so that maybe you're not in a position now, but in a few months they can help you.
Okay, so let's say we're getting ready to make this offer on the house. We've been pre-approved.
Right.
We're ready to make an offer. What comes in the offer? I remember this is something that you're very good at.
Right. So when we submit an offer as your realtor, we submit a package. So we have the RPA, and that's the residential purchase agreement. So we submit the RPA. It's got all of the terms of your offer. It has contingencies. It has all sorts of things in your offer. If you want the dishwasher, if you don't want the washer and dryer, and all these different things, the length of escrow, the closing, a bunch of things. And we'll get into a little bit more of that in a minute. But with your offer, so it's the RPA, which is the residential purchase agreement, right? POF, we call it, which is proof of funds.
Yeah.
Basically, it's just often can just be a screenshot showing that you have the down payment.
Literally got to show them that you got the money for the down payment.
They want to see that you have
sitting
cash.
there. Yeah.
Absolutely. And then also your FICO score, which is something that the mortgage broker will do when they get you your pre-approval. So most of the time when you're submitting an offer for a house, they want to see your FICO score just to make sure that you actually can qualify for a loan, because they don't want to go into contract with someone that actually can't buy the house.
That's just a waste of their time.
Absolutely. It's the logistics. Another thing that I often add is a letter to the seller. So buying a house is a very personal, very emotional transaction. And I have gotten many, many, many clients' offers accepted because of the letter.
Okay, this letter. This was something that, like, going into it, I didn't think so much about. And you were like, no, Tanner, you need to write these letters. And I was like, oh, okay. And then I let you write the letter.
We wrote it together.
We wrote it together.
I had some tips. I had some feedback.
Well, because it's like, because the person out there selling the house, if there are some people out there who, no matter what, they're going to be about the bottom line, and that's fine and dandy. But let's say you get two bottom line offers and they're very, very, very similar. And then one person accompanying the offer is a letter. I don't know what you would call it. I mean, just
Well, look, when you sell a house to a lot of people, they have lived in this home for multiple years. They have seen their kids take their first step in the kitchen. They've seen, their friends get married in the backyard. Yeah. There's an emotional attachment to property and to houses. And sellers want to sell the house to someone that they feel is a good fit for their house, that's going to take care of the house, that's going to love it as much as they love it. People are very emotionally attached. And I understood this, but now that I think if I ever sold my house, I would want to sell it to someone that loves my house as much as I do. Right. And if I knew, it was between a really lovely, wonderful couple and someone that was going to buy it and just rent it out and didn't care about the house and just wanted to get the most amount of money sucked out of it, I wouldn't want it to go to that person.
Right.
So the letter is actually really important. Again, why you need to use a realtor when you submit your offer, because they can help guide you through this. So the letter is really important. So that all gets put together in a nice PDF if you use a good realtor. So when I submit my offers, I always put them in a really clean one PDF. And when I actually work for sellers, it drives me insane when real estate agents will send me an offer with about 5 different attachments.
Oh, God.
Yeah. So I like to put everything in a nice, neat package. I always call the listing agent before I submit the offer. I have a discussion with them. I find out what the seller's motivation is, if they want a longer escrow, if they want a shorter escrow, if there are terms that they really are important. So if there's for example, a piece of attached property or a chandelier that they absolutely love, then I will write it out of the offer so they get to take it with them. Sometimes people want what's called a lease back, which means they're able to stay in the house a little bit after close so that they can have some time to pack and move. And when I write that in, there's a bunch of ways that I can protect, as a buyer or seller, protect the needs of my client doing that. So it's a bit of a complicated process, but that's what you submit in the offer package.
The interesting thing that's about it is I remember we put out, I think I put offers on 3 houses.
Right.
And there was one of them that we had a lot of back and forth about. And that was something that I didn't, being a first-time buyer, I wasn't totally prepared for is like the fact they're going to come back and say, oh, no, how about these terms?
Right. Well, what's interesting with that situation is the sellers had put their house on the market and they wanted to buy and sell at the same time. We submitted an offer and then they decided, actually, no, we don't want to sell. That's what happened.
It was a good offer. It was an appropriate offer.
Yeah. And I think, again, if people aren't motivated to move or to sell, they don't have to take your offer. So this is what happens after you submit the offer. The sellers can either accept the offer outright with your terms. Yeah, here we go. Let's open escrow. That's pretty unusual. And they can also reject the offer. So if you submit a lowball offer and you insult somebody, often they'll just be like, get out of here. I don't even want to talk to you. What normally happens almost always is there's some form of a counter. So if there's more than one buyer, we'll have a multiple counter situation. So they'll send a counter to me and perhaps 2 other agents saying, give us your best and final, or we want these terms written in. Or it could just be a single counter where you're the only offer, and yes, we like your terms, but the seller wants you to come up $5,000, or the seller wants you to come up $10,000. So that's what's called a counter. So there can be counters back and forth and back and forth and back and forth. And that happens all the time. And that's the negotiating phase. Again, a really important task for a realtor is to really handle these negotiations so that you get the best terms possible for the best price. And they're there to look out for your best interest.
Absolutely. There's a reason it's a full-time job. We're going to be back here in just a minute, and we're going to talk with Natalie Salins from Movement Mortgage. She's going to talk to us about the pre-approval process and getting a loan. Again, she's in the top 1% of mortgage lenders in the country for the last 5 years. So she is obviously a wealth of knowledge about this.
Oh, here's something else interesting about Natalie. She's an unbelievable opera singer.
Really?
Yeah.
We might have to try to get her to sing some of this.
I know.
Here is your buyer's tip. You need to keep an eye on your credit. I know a lot of people don't think about this until it's time to buy a house. You want to keep low credit card balances. You want to start saving money towards your down payment. As much cash as you can get together, you're going to need it. Okay, guys, we are super lucky here on the LA Real Estate Podcast. We're about to talk to Natalie Salins with Movement Mortgage. Natalie, what's your favorite dinosaur? And tell us a little bit about yourself and Movement Mortgage.
Favorite dinosaur is a brontosaurus.
Oh,
excellent choice.
The big one.
Vegetarian,
course, yes.
okay.
Vegetarian, gentle giant.
Tell us about Movement Mortgage here. You're in the top 1% of mortgage lenders in the country for 5 years running now. How do you do that?
Good question. I would say a lot of attention, a lot of communication, a lot of focus, and
A lot of coffee.
And knowing the business and understanding what it is people want and how to accomplish it.
Right. So, Natalie, when somebody first, is jumping into this process, a lot of our listeners are first-time home buyers. They've never done this before. So they say, okay, I need a mortgage. What do I do? So what paperwork do you need from them before they can get their pre-approval?
Sure. So as a standard, we always like to say the number 2. So we need 2 years tax returns, 2 years W-2s and or 1099s, 2 recent pay stubs, 2 months bank statements. There's a ton of programs that you don't need all of this documentation, but that's really the standard.
And when should somebody start talking to a mortgage broker?
I'd say at least 2 or 3 months before they're really ready to buy. A lot of the times I pull a credit report and there's something on there that we need to kind of like fix and clean and get off. Also, depending on how much money you want to put down, sometimes you need to prep yourself a couple months before to get that ready. Most of the time, though, when we do end up pre-approving somebody, they go out, they find something they love, and they get into escrow sooner. But it's a good idea to start on the forefront with the getting approved process rather than start with the looking process.
Right.
It's better to know the numbers, understand them, feel comfortable with them.
You mentioned, taking a look at the credit report and see if there's anything on there that you need to fix. Could you describe something that might need to be fixed and how somebody like yourself goes about that?
Sure. So happens all too often that I pull a credit report and a collection pops up from like, who knows, 5-6 years ago that you didn't even know you had. You switched phone carriers and the past phone carrier carried a balance that you didn't know. And all of a sudden it becomes a collection. And now it's hurting your credit score. And so we talk you through how you can get rid of that collection, not just pay it off, but also get it deleted. And then I run something called a rapid rescore where we pull it off the Bureau's records. And that's something that Movement Mortgage does as a courtesy to our clients. We also have something called a credit wizard where we can pull very exact numbers on how to get the credit score up based on paying down balances. So we always say, don't pay off your credit cards before you buy. Like a lot of people, it's a misconception, think that they need to get their debt down to zero. That's absolutely not true. Don't pay off your cards. Save your money for the down payment and closing costs. And let me kind of direct you very specifically to if paying down the cards is even necessary, and if it is, what that exact number is.
Natalie, it sounds like what you're talking about right now sounds like the exact reason why somebody might come to someone like you as opposed to just walking in to, say, any random commercial bank.
For sure, yes. It's a different level of customer service and care and attention as far as, working on the weekends and after hours, things like that.
Like a Sunday afternoon, Natalie?
Yeah.
I have a lot of clients that always say, oh, my commercial bank, it's right down the street and I can just walk in there and I already have an account with them. And the amount of delays and issues that pop up sometimes with commercial banks, you think it would be easier, but really using a direct local lender makes so much more sense. Correct, Natalie?
It does for most people, yes. Everybody's rates are really darn competitive nowadays, so everybody's getting basically similar rates no matter where you go. And when you've got a bank working for you, that is all they do, that is their top priority is to do mortgages and nothing else, you're going to get through escrow in a smoother and more succinct manner.
Hey, Natalie, I'm curious about somebody, let's say they're getting ready to do their taxes and they know that later on they're going to be trying to buy a house. What are the things that as I'm preparing to do my taxes I should focus on?
It depends. So if you are salaried, there really isn't much that you need to worry about or focus on. You're going to be okay. It's going to show up as a W-2 no matter what, and you should be fine. If you're 1099, it is going to be something that's very different because it's going to depend on how you write off and deduct some of the income that you show as your gross. So it is something that you might want to chat with your mortgage lender before you go ahead and file and have just a brief discussion on how you plan to file, what those deductions are. Of course, a mortgage lender can't advise on how you should take deductions, but there are certain deductions that are taken that we can add back as income that are great to note and be specific on. Also, things that can trip people up is when you are newly corporated. So depending on how the corporation pays you can also sometimes, delay things in the mortgage process.
Would you recommend talking to your broker before filing your taxes?
Yes.
Absolutely.
I do.
Okay. Now, let's shift to down payments a little because this is a big question I get a lot from first-time buyers. How much of a down payment do people need? Do people absolutely need 20%? Can they get a mortgage with a lower down payment? What are we looking at?
So absolutely not. It's another big misconception. Most people don't put 20% down, if even 10% down. I'm finding that that's the average now is the 10% down. I have programs up to $3 million with only 10% down. I have now programs with 5% down up to $1.5 million, $2 million. There's a lot of different ways to go about not having a large down payment. It just depends on which program and which investor we go with. There are things called non-QM loans and then regular standard conforming, conventional loans. There's all different types.
For somebody that doesn't even know what a mortgage broker is, can you describe that? Could you describe what a broker is?
Absolutely. So there's all different types of banks, right? You've got your Chases and your Wells and your Cities. Those are depository banks. Those are banks that, like I just said, you go, you deposit money. They have actual branches you can walk into. And they have all different priorities, that kind of bank. The mortgage priority for them is just one small section of that institution. Then you've got proprietary banks like a Union Bank of California, East West. These are banks that hold their own mortgages, but are smaller. They're not so grand. Then you've got a mortgage bank, which is what Movement Mortgage is, and some other mortgage banks that you've seen out there. Mortgage banks are, all they do is fund loans, and they also broker loans out. So I work with all different banks and all different investors who wholesale to us, that if you have a specific type of, file, I can get it done that way. If you want interest only, if you want 0% down, if you want a bank statement only program, so I'm not even looking at your tax returns. There's all different places to kind of structure and fit your file nowadays. And mortgage banks broker out to those special investors that will do that and buy that.
So basically you have a whole bunch of different loan products, and you see what your customers' needs are, and you fit them with the right loan product.
Correct.
And in this extremely competitive market, I know because I've worked with you before that there's things you can do to make somebody's offer a lot more appealing as far as their mortgage. For example, being able to approve their loan much quicker.
Mm-hmm. Absolutely. Well, Movement approves loans up front. So we have a process called a TBD process where we actually get the file in for full underwriting before you actually have a property that you're in escrow on.
Yeah, I've done this before with you, which is amazing. So we're able to submit our offer, and we'll be talking about contingencies on an upcoming podcast, but we're able to submit our offer with no loan contingency, and it makes your offer a lot more appealing to a seller in a multiple offer situation.
It does. It makes it more competitive. It allows for also like a better peace of mind by the buyer, because they know that loan has already gone through underwriting and is already, committed and approved. It's just an easier way about it. There is so much to do during an escrow process. To have to worry about and wait for a loan approval to come in definitely adds to the stress of it. And if you are in something that's only a 20-day escrow, it's the last thing you need is to also worry about that. So if that can be done on the front end beforehand, it definitely relieves the stress and just makes it an easier, smoother process.
Well, and just to break it down here, because we're really aiming this at the first-time home buyers, when we're talking about a loan contingency versus a pre-approval letter, the pre-approval letter is exactly what it says, that you have been pre-approved for the loan. You don't actually have the loan yet. And so the loan contingency, when you're writing an offer, is about, hey, I'd like to buy this property. And then there's a loan contingency about whether or not you actually get that loan after your offer has been approved, right? Because that's what we're talking about. Movement mortgages, there is no loan contingency. You've already been approved by the time you guys make the offer.
That's correct. Yes. And we actually have like a stamped loan commitment that you can provide when making the offer.
That's amazing. And again, in this competitive market, whatever you can do to put yourself a little ahead, and sometimes it might not necessarily be the number that you're offering on the house. And Natalie, you spoke a little about underwriting. And again, for the first-time buyer, can you just explain what underwriting is, what an underwriter does? Absolutely.
So in the loan process is when everything gets combined together into your full file, all of the documents I need, and it gets submitted to the underwriter. The underwriter is the person who's going to verify and review all of the income docs, do a little bit more of a deep look through the file, and they are the ones who are licensed to stamp the approval, which makes the file A grade, B grade, but it puts the file in its place to then, of course, be wherever it is sold, throughout the market. But they are the person to claim the file is complete and clean and of a certain standard. And they put their name and their license on the line when they stamp loan approval on things.
Natalie, thank you so much for joining us today. You gave our listeners a ton of information. If somebody wants to get a pre-approval or has more questions for you, is there a way they can reach out to you?
Yeah, certainly. So it's just my name, Natalie.Salins, which is Salins, at movement.com, just like movement, movement.com. That's my email.
There we go. Natalie Salins at movement.com. Thank you so very much.
You're welcome, guys. Pleasure.
Oh my gosh, it really, Natalie really hammered home the advantages of working with a mortgage broker versus a big commercial bank. Like the fact that if you get to her with enough time before you're ready to buy the house, she can help you with your credit.
Absolutely. And again, this really drills in. Get your pre-approval before you're ready to buy. Don't wait until you find your dream house because you could lose it. Here's a buyer's tip. Okay, this is funny, but look at the listings with the ugliest photos. Those are often the best deals. So when someone goes to sell a house, they make it beautiful. They paint it white. They make the photography look good. They stage it. They do all these things to get people in the door. So those listings are seen by the most amount of people. The listings with the ugliest photos, often very few people come to see them, and it might look much better in person than it does in the pictures.
Yeah, it's basically the opposite of Instagram. All right, here we go, guys. 10 things to do to help keep your credit score and get you a loan. The first tip, super obvious. Everyone should know this, but we're going to say it just to hammer it home. Never miss payments on your car or your credit cards.
This is really important, especially if you can only make the minimum payment. That is better than making no payment. Don't miss these payments.
Number 2, try not to utilize too much of your credit.
Right. So if you have big credit lines, really try to not overspend. Don't buy large purchases on your credit cards. Try and keep as much of your credit free as possible.
Number 3, make sure you have credit. Listen, if you don't have a credit card by now, you should probably get one because no credit is worse than bad credit.
So this is something, I'm originally from Canada. So when I moved to the United States, I had no credit. And I was blown away that having no credit was actually worse than having bad credit. And it took me about 2 years before I was even able to get a credit card. So it's really important. If you've never had a credit card, you've never gotten credit, go into a bank, try and get something. Even start with a gas card or a department store card and pay your balances off in full every month. You'll quickly start to build credit.
This one was a little bit of a surprise to me. Don't make any big purchases without checking in with your lender.
Yeah, so when you're on the house hunting search, make sure you check with your mortgage broker before you make any really large purchases. That includes large amounts of furniture, that includes new vehicles, that includes any big purchase, because it can actually affect your credit enough or your the credit on your credit card enough that it could disqualify you from getting a loan. So just touch base with your lender before you make any large purchases.
Also, do not close any credit cards or your line of credit. Keep them open.
Right. So sometimes people think, hey, I finally paid off my credit card. I'm going to close it. Don't do that. That can actually drop your credit score. So especially credit cards or accounts that you've had for a really long time, you can have a zero balance. Just keep those cards, keep those lines of credit, because that affects your credit score.
Also, don't lease a car without checking with your broker first. Again, if you're already on the house hunt, you want to maintain your credit where it's at.
Yeah, that's a big one. So just touch base with them first, but make sure you don't do any spontaneous decisions like that, because that, again, can disqualify you from getting a loan.
All right, make sure any gift money is seasoned in your account for 3 months. Sarah, could you tell us?
Right. So gift funds are when you're getting cash from a family member to use towards your down payment or the purchase of your home. A lot of people don't know this, but gift money has to be seasoned, which means it has to be in your account for about 3 months before you can use it. Again, just check with your mortgage broker before you get any large amounts of money from family.
Number 8, this one is also a no-brainer. Keep your employment stable. Guys, don't go quitting that job if you are currently on the house hunt.
Right. If you lose your job right before you're about to get a mortgage, you're probably not going to be able to get that mortgage. So, if you know you're going to be laid off in 3 or 4 months, now is the time to buy. Obviously, you want to still be able to afford your mortgage, though,
for sure.
so don't do anything crazy. But if you know your appointment situation is going to change, again, touch base with your mortgage broker.
This is one that I had to deal with personally because it's like at my old job, I was W-2'd and then I elected to become a 1099 employee.
Right.
And that showed on my employment history as though I was unemployed despite the fact that I was never unemployed. So that also goes into it. If you're W-2'd, just stick with being W-2'd.
Absolutely. Also, check with your mortgage broker before you file your tax return about write-offs, because if you're self-employed, if you show too much of a loss, if your company shows too much of a loss, that can actually prevent you from getting a mortgage. So even if you make a ton of money, if you write all of it off, you might not be able to qualify for a loan.
And finally, number 10, repair any outdated items on your credit report. A really good mortgage broker can help you with this. You don't necessarily want to trust inverter repair companies. A lot of these places are scams.
Right. So the credit repair companies often, there's some shady ones on the internet. Don't trust them. A good mortgage broker should be able to protest some of these things on your credit report, especially if they're outdated, and get them removed. So, everything you can do to clear up your credit will help you not only qualify for a mortgage, but also get you the best rates.
Yeah.
So I believe 720 is the credit score above that you're going to get the best rates.
So definitely, if you're on this first-time home buyer path, you want to start looking at your credit and get it tuned up.
Get it done.
All right, guys, on the next episode, we're going to be talking all about terms in your offer and tips on getting your offer accepted in a bidding war. It's not always about the money. Sometimes it's about how you're trying to set that offer up.
Absolutely. Contingencies, we'll be going through all sorts of things about contingencies, explaining what they are. Other things that are in your offer, we're going to really break it down on the next episode. Tanner, as always, it's just a treat to be in the same room as you.
Sarah, thank you. You pay me in bacon.
I sure do. Just before we go, I just want to say Tanner's breakfast this morning was basically a plate of bacon.
Yeah, it was. And I'm not embarrassed about it at all either. By the way, if anybody wants to get that information about Natalie, it's going to be in the podcast notes. And you can also find Sarah's information in the podcast notes. And also, my social media if you want to reach out and hit me with those likes or follows or whatever.
Yeah, that would be amazing. And thank you so much for listening. So we'll be back on our next episode.
Guys, I'm a fucking one-take wonder.
That was amazing. Oh, my God.